Good morning, good afternoon, and good evening to our viewers and listeners. Welcome to another exciting episode of The Trading Edge with my colleague Sihle Tuta over at Exness and myself, Terence Hove. We hope you've been liking the content we've been creating for you, the conversations we've been having, and look out for more exciting episodes as the conversation are going to be quite vast with regards to enlightening and improving your trading experience with us over at Exness. And remember to always follow us through and on all our different social media pages on Facebook, on LinkedIn as well. We are there on Instagram, on Telegram, engage on YouTube. And leave a comment, show some love. And again, thank you as well for following and engaging with us. And today, with my colleague, we are going to be talking about a very hot and topical question that's probably going to remain for the next, coming couple of years. And this is the post-market reaction of the recent U.S. elections. And in case you weren't following what has been happening, presidential candidate and former president Donald J. Trump is now president-elect following the recent U.S. election vote and voting day. And again, with his presidency comes what they call the trifecta, which is the red sweep, as markets are calling it, which means the president is Republican, the Senate is Republican or controlled by Republicans, and the House is also controlled by Republicans. And what does this mean? I mean, you can see what the financial markets have been doing. And with Sihle, we're going to be going in depth with regards to that analysis and what it means for your trading in this episode of The Trading Age. Sihle, how are you doing, mate?
I'm good on yourself, Terence. How are you?
Very well, thanks. Very well. Bit of a mouthful of an intro this time around.
Yeah.
I guess lots to talk about as we've been engaging and watching closely, that U.S. election. But we're not talking about the politics side of things. We're talking about the financial market side of things and how the financial markets have reacted to that outcome, of the U.S. Presidential elections. What does it mean right now? What is it likely to mean or possibly means, going into the future for the rest, of the year, going into 2025 and the coming years as well under this administration. So if you trade financial markets, information is the key driver to price in financial markets. So you need to be informed. And we're looking at it from the financial markets perspective, and what are some of the sentiment or the analysis that you've seen from your side post the U.S. presidential elections with regards to financial markets?
Well, I mean, with the incumbent, him taking office, it does bring some sentiments, which we're obviously not going to focus on a lot, but I mean, he is who he is, and he is the leader of the most powerful nation on the planet, and his policies and his views definitely matter because they will impact the currencies of America's trading partners. Post-election results, I think we saw the rand sort of going from 17 against the dollar to what now is just over 18. Right, which is good for some, but it's also bad for some depending on which position or which side of the market you are in. I think it's going to be interesting to see some of the changes that are going to come, with trade agreements, especially with South Africa and America, because America is one of our biggest trading partners. So with the incumbent and his administration, especially because, so this is not necessarily a policy thing. But we have our friend, right, from South Africa, Mr. Tesla, who is very close, to the American administration as it is currently. How that's going to look like for the companies that he runs and what's that going to mean For the rest of the world, still remains to be seen. But I think particularly the reaction of the markets to the outcome of the elections in relation to the rand, we did see some impact on that exchange rate.
Yeah.
Because I think, like I said, pre-election, the rand was trading at 17 to the dollar, and now it's just over 18 to the dollar.
Yeah.
So that is what I noticed, because that is the one currency pair that I was watching to see how it's going to look like. On the stock market side, I think there has been some volatility there, especially with the local stocks on the local JSE. There's one thing they say, that when America sneezes, everybody catches a cold.
Yeah.
And we have seen that happening across all the different sort of asset classes. I don't know what your observation has been, especially with the major asset classes. I mean, what has been your thing?
Yeah, I mean, it was resounding. Everything was in the green.
Yeah.
Or everything, in terms of the American financial markets, and the sentiment around that. And I think what the market is pricing in is a very pro-business environment.
Yep.
Given, I think, some of the comments leading up to the actual vote. And that's what we're seeing being priced into the market. As you mentioned, we've seen how Tesla literally jumped, in a positive direction in terms of the market pricing. And again, it's that outlook on the positivity of the sentiment around that particular stock.
So can we confidently say that the markets love the current administration?
Clearly, with the way they reacted, that's what it is.
Yeah.
So you could see with the market pricing, which candidate was more market friendly. And what was also very interesting was how gold sold off significantly. So that also highlighted the risk premium that was around the actual vote. And when the outcome came, that risk premium was priced out of the market. So it's interesting to see, even through an instrument such as gold, a safe haven asset, where pricing was in as far as the outcome that will be favorable. So if gold is coming down, well, if you're in the opposite side of the trade, that's not so good for you. But gold coming down is a good thing, because we're now getting into less risk into the market. Gold, as it was approaching 3,000, though it might be good from an investment perspective, or if you are long gold, but it's not necessarily good in as far as risk is concerned, because that's a lot of risk in the market. So seeing that risk premium being priced out of the market was quite encouraging with regards to that future outlook, going into 2025. What was also interesting, back to your question was, so are we saying markets, we're happy with the outcome? Yes, when we look at the U.S. markets, that is the outcome that they rallied on. And it was a very, very strong rally as well. I mean, it was green. U.S. dollar was strong. The equities, so, like we mentioned, your Teslas were strong. If you look at your S&P 500, your NASDAQ 100, those were, again, also in the green. And now the question is around what interest rate policies, different central banks are going to following this outcome. I think on a previous trajectory, a lot more cuts were being priced in from the US Fed, but it's now seemingly that they might just do 25 in December and hold. And should they do that? Because they're now speaking of, the inflation outlook. It's starting to look inflationary. But this is a forecast, and as they've been saying, they've been data-led in terms of what each interest rate decision is going to be. So now if the expectation is now more inflationary, the question is, from a policy perspective, are central banks now saying they're deviating from actual data and now managing future expectations of inflation as opposed to being data-led by each piece of data that comes in. There'll always be data-led, but in terms of, that market commentary, it's seemingly starting to deviate.
Doesn't the policy affect the data? Because data is not constant. It's basically...
It's always shifting.
Yeah, it's shifting.
Yes, policy does affect data, yes. Policy does affect data, and then they need that data to confirm if the policy is going in the right trajectory or they need to change and etc. So I think the key asset classes, we've had these conversations, in different episodes that you need to be looking out for, because now the outlook is 2025.
Yeah.
We saw Bitcoin getting to the 100,000 mark.
Yeah.
We saw gold nearing the 3,000 mark, but there were so many other risk factors. Again, going into 2025, a lot of those risk factors that were driving the price of gold higher, are they still going to be there? And they look to be subsiding. They're getting less and less and less. And if there is less risk in the market, which means it's becoming a risk-on sentiment, traders and investors tend to get into more riskier asset classes.
Okay.
And those more riskier asset classes, such as cryptocurrencies, tend to do well in this type of environment.
So had the outcome been opposite to what is now, what would have been the impact post-elections?
So I think we can only know the fact when it comes out.
Obviously, from a speculative point of view.
From a speculative point of view, I think the markets have shown the outcome they preferred.
Okay.
Right? Because that's ultimately what it is. Preference. Right?
But then again, we don't know with a degree of certainty that perhaps the markets would have been greener.
They could have
been much greener.
Yes.
We don't know.
Yes. So what we do know reasonably is the promises that were made.
Yeah.
And based on those promises that were made, there are certain promises that were pro-market and not so pro-market.
Okay.
Some pro to a certain extent, but with this outcome, you can see the level of green that has been there because of the promises that, should all of these promises come to fruition, or some form of them, they are very pro-market, pro-business. Yeah. And given that outlook, if we look at the strength of the rally on the outcome, it can only then say, an alternative outcome could have been seen as more riskier in terms of the markets, in as far as the pricing concerned. And primarily the driver behind that will be the promises that were made, or the expectation of those promises to be fulfilled, should, the president-elect, say prior either or coming into office was going to be more pro-business and so forth, based on what they said, because that's what you can work on. Based on what they've said, the likelihood of the policy trajectory.
Okay. So looking at the performance of the stock market in the last couple of weeks, right, post-election, across the board, as we said earlier, that most of the stocks were green. It was time for harvest for a lot of people, for a lot of investors, right? Yes. So looking at, for instance, the trajectory across all the stock markets, or at least the major ones, LSE, NYE, and we'll use the local one, which is GSE, because this is where we are. What does that mean for the local economy? So when stocks are green, when the stocks are up, right, what does it translate to for the local economy?
Yeah, well, firstly, what it translates, so there's different aspects and let's call them layers of effect to the economy. So firstly...
So sorry, can I interject? So
sure.
I'm going to so maybe extend the question to mean that, so if the stocks are green, right, it means that there's appreciation,
Yes.
right, which means there's more value added,
Yes.
right? We're talking about the conglomerates,
Yeah.
right? All the companies that have issued IPOs that are listed, right, on a stock exchange. If those companies are doing well, and assuming these are the big ones, let's say, for instance, the top 40 in the case of things
The
like
JSE,
the
yeah.
JSE.
Yeah.
If the top 40 companies, right, on a local stock exchange, if a majority of them are doing well in terms of value, if their stock is appreciated, how does it translate to for the local economy?
For the local. Okay.
Yeah.
So, firstly, from the stock itself, it's a piece of the company that you own.
Yes.
So the company has become more valuable. So yourself as an owner of that company, your net worth generally is increased.
Yeah.
You know, at least from that the corporate's valuation in terms of the value of the company has increased. You as the owner of the company or part owner, you know, your worth has also increased. Now, for stocks to grow in value, there's demand. And the stock market, they call it the stock market, but it's a capital market. Ultimately, stocks are floated to raise capital.
Yeah.
So if a stock is in the green, that means that there's more inflow of money and demand for that particular stock, right? So the capital being raised by that particular company is also increasing, which would ultimately mean they're able to, for the purposes that they're raising the capital, able to do more business,
Expansion.
ultimately, yes, expand their business activities. And that expansion of business activity is what then is seen as positive for the local economy, because goods and services are offered or are likely to be offered at a more competitive rate, because ideally you want to be able to price your products in a way that, you know, the demand, you know, meets the supply. You don't want you know, to price yourself out of the market, if we could call it that. So the company is going to be more competitive from that perspective with regards to the ability for them to do business, you know, calling it in simple terms. And ultimately that will be good for the consumer. As the consumer consumes more, the ripple effect goes. There's more tax that's raised. The more tax that's raised, the more government is able to embark on other projects, expansionary projects and so forth, which creates more employment. So that ultimately is what, you know, healthy green markets mean.
So does it in any way, shape or form translate to the volatility of the stock? Or maybe should I say, how does it make it attractive to speculators?
To speculate, okay. So again, I think it's also sector specific, because some sectors, as we mentioned, say cryptocurrency, you know, they are having, you know, a resoundingly good experience. Now, for those particular sectors that are going to benefit resoundingly from, you know, a particular outcome, right? It will be good, you know, for you as a speculator if you are positioned in the right way, because ultimately it's volatility, right? Some who see as this favorable, some not so favorable. So that buying and selling of the instruments and various securities is what you as a speculator need for you to be able to engage in your speculative activities.
Okay. So, I mean, with obviously the new administration, right, what can we expect the price of the other commodities to look like going to 2025 with the new administration?
As in?
The other commodities, for instance, that are tradable. How is this outcome going to affect their pricing?
So the first one that comes to mind is oil. You know, I think there's an expectation, you know, at least from the U.S. perspective, that there's going to be more supply of oil coming into the market, you know, should the promises and the initiatives spoken about be rolled out. and this would only be good for the supplier, because then that pushes the prices lower in as far as the commodity is concerned. And there are other commodities that are not always so popularly traded, though they are very big, such as copper. Copper tends to be a good indicator of positive economic activity. So the more progressive businesses getting, the more active an economy is getting, the higher the prices of copper are going, because it's seen as a healthy trend. So commodities such as that. And of course, you've got green energy, that at this particular moment, which the movement of the Tesla stock is quite interesting compared to the contrary, in terms of, support, or maybe not as sufficient support for green energy and the underlying, lithium, commodity. So what does that mean? So if Tesla is doing good, we know that's a very key component for the whole technology, of renewable energy in any form. So it's I think that is now the particular commodity to look at, going into these next couple of years. I think that will be the outcome. Gold will remain gold. If risk is there, it does very well. If there's risk of sentiment, it does very well, because markets are jittery and they are concerned about the level of uncertainty in the market. But as more certainty comes back into the market, as more stability comes, as more geopolitical risks start reducing, and then you start seeing the price of gold coming lower. And everyone has been trying to catch that reversal. From the all-time highs that we have seen. There's still other risk factors that are out there, but they're starting to cool down in as far as, what's driving the price of gold. So this could be that, reversal that was much anticipated, and also in as far as gold is concerned, if, central banks are now having a more inflationary outlook, they're not cutting as much, and they're looking to maybe do one or two more cuts and then hold and observe, then that'll play in the price of gold as well, in terms of it coming lower, with that inflationary outlook. So I think those will be the interesting spaces to keep an eye on in terms of commodities, going into 2025.
So for retail traders, those who trade on the Exness platform, trading all these different asset classes, would it be better, and obviously without giving out advice, would it be better to focus more on the fundamentals as opposed to the technicals? Because, fundamental traders, if they speculated correctly, right, if they were on the money to say that the outcome of this election is going to lead to all these stocks and all these asset classes being green, you would have been green across your entire basket, or with the majority of the asset classes you have in your basket, right? So going into 2025, what would be a more rewarding approach to focus on, technical or fundamental, or a combination of both?
So I think a combination of both, relative to the strength you have. Because technical analysis, as I always view it, in the technical chart, it's explaining the fundamentals as well. As I mentioned, both relative to your strength, technicals will do very well, because in that technical analysis, you also have the fundamental story being explained, being described. And at times, people miss that part. Because, it's price action story being delivered in a different way compared to following the economic calendar, forecasting the possible, effects on price. It's both analysis. And at both points of the analysis, technical and fundamental, ultimately the decision being, gotten to is, what is price going to do next? The technical analysis tries to establish that, and the fundamental analysis tries to establish that.
Yeah.
The technical analysis will give you indicators, certain formations that because of previous price action, this is likely going to happen, should the same be repeated. And I mean, for those who ultimately follow that technical analysis, there's different layers of, confirmation that they go through that leading to a decision. Similarly with fundamental, they would say these are the main drivers of price action, and should this outcome happen, this is the likely outcome of that price action. If this outcome happens, this would be the likely outcome of this price action. So in all of them, they're essentially analyzing the same product instrument and trying to ascertain where price is going to go next. Right? So to your strength, you play to your strength. If your strength is in fundamental analysis, then you drive that narrative.
So stick to what you're really good at.
Yes.
And just capitalize on that.
If you want to mix both, then you do it relative to your strength. And why I say that is because if we look at technical analysis, there are a host of different setups and, tools one uses for their technical setup to get to a decision. It's not the same. And if you look at a fundamental analysis, some would not necessarily be driven to make a decision on some economic data or change a position because of some, headline or market dynamic that is coming, So it ultimately comes down to playing on, on your strengths going into markets 2025.
Makes perfect sense. Interesting insights as always, Terence. I think we've come to an end of this part of the conversation. To our viewers at home, please like and subscribe to the channel. Please add your comments in the comment section and follow us on all our social media across Instagram, Twitter, LinkedIn. And until we meet up again, cheers for now.
Bye for now.